at those bonds. Mike, but I was stalling for you. Now you can answer the question. The question is, how does corporate AAA bonds compared to these bonds in the market? Which one's better? Which one's more secure? Which one has credit risk of this or that? Which one, when you sell them, is going to command a premium on the interest expense?
I think the first question is it appropriate to compare the price, the interest rates on these bonds to corporate securities, and we'll say specifically Microsoft and Johnson & Johnson? So the first question is the interest rate comparable? The credit ratings, obviously at AAA, are comparable. By securities regulation, the offering documents have to be true and correct and not omit something to make it materially misleading. That's a requirement of securities law, whether it's municipal or corporate. So if the risks associated with those corporate bonds that you mentioned, Microsoft, JNJ, right, if those risks were equivalent and comparable to the risks of these utility ratepayer bonds, knowing the regulations, I think it's fair to say the disclosure amount or amount of disclosure would be comparable because they're comparable. Is that fair?
Mm-hmm.
In the last prospectus issued by Microsoft, it was 77 pages. Johnson & Johnson's prospectus was 48 pages. The prospectus for OG&E was 178 pages. So on the basis of the necessary disclosure to allow an investor to make an informed decision, I would argue they're not comparable.